Now, depending on the point in time when you watch this video, the numbers may change, but credit card usage is on the rise, and credit card balances are reaching their maximum limits, and we are entering into a recession, if not already in a recession, and this is not good, not at all. Now, myself, personally, I'm not excluded from any of these topics and discussions and conversations. And I will be the first to tell you that I am still making payments on a credit card that I got when I was at a very, very young age. That credit card, I believe I got my first credit card around 20 years old. I think it was about 20, 21 years old. And now I am 38 years old. So a span of 17 years. 17 years with sitting here having this conversation with you about credit card debt. Credit card usage, maxed out credit cards, struggling to pay bills, having no money in savings or safety net, because if you did, you wouldn't have high amounts of credit card debt, with no end in sight, and a stress, anxiety that can keep you up at night, because you're in this never-ending cycle of debt that you can never get out of. Sometimes people ask if we see a change in our economy, if we see a change in our currency, if we see a crash of the dollar, the central bank, will that wipe out our debts? Will we start over from scratch? Will we reset to zero? That would be cool. That would be great. But think about it like this. Let's just say that did happen. What would be the first thing that you would do? And overall, what would you do differently? Because I can tell you without a shadow of a doubt that if all debts were wiped out, if we had a reset, if we all went to zero, I would be willing to bet that in a short period of time, we would see people back in the same rut, in the same situation of buried in debt. I'm talking about consumer debt, revolving consumer debt, store credit cards, gas cards, and not the debt that makes you money, because there is good debt. There's debt out there that can make you money. Debt that businesses use, that wealthy individuals use, millionaires and billionaires use to make money. They use debt to make money. So when I think back on my personal debt journey, my credit card journey situation, I think about my first credit card and what that really means. Now, I'm still making payments, which, obviously you're going to say, that's not good. It's a terrible situation to be in, having paid on a credit card for 17 years. But the reason why is because I believe that it is helpful for my overall credit profile, my credit snapshot, what my credit looks like. Because when institutions, when lenders, when underwriters look at your credit report and they want to evaluate your credit worthiness, they look at a variety of different inputs that ultimately produce a score. Now, the score can be higher or lower depending on a variety of circumstances. But no matter how high nor how low, if you actually look at the data and the reason behind the actual score, it actually paints a bigger picture. So for instance, if you were to apply for a mortgage, albeit mortgage rates are pretty high today. But if you were to apply for a mortgage and you had a credit score of 740, you would be considered a prime borrower. You would be, your application would ultimately allow you the ability, so long as you had a mortgage credit score, which is different than just a regular credit score. They have a separate mortgage credit score, averaging 740 between the three credit bureaus, not taking into account social credit. Then you would be a prime borrower capable of receiving the lowest rates possible. But here's the kicker. 740 is a good credit score, maybe even above average, maybe even considered very good. I believe over 800 maybe puts you into the excellent category. But even at 740, which is the magic number, by the way, for mortgages to get the best rates, at 740, they'll then analyze and say, and this is at any score really, okay, you have a 740 credit score, which is great. However, you have some late payments. Because you got to think, well, you could have had an 800, but you got a 740 because you got a late payment somewhere. Or we're looking here and we see that your credit card utilization is pretty high. We look here and we see that you have 2 outstanding loans with auto manufacturers. We look here and we see that you have student loan debt as well. There's actually a collection notice on your credit report. So when the underwriters start looking at your credit, it's more than just the number. The number is a snapshot. The number, depending on the lender, will look at the number and they'll automatically approve or deny. But when it comes to a mortgage, they look at the number, then they dig deeper. And this also has an impact on the score overall, which is why I still make payments on a credit card that I received when I was at a very young age. And it's not because I've made poor financial decisions and made very bad choices and I'm carrying a credit card balance and debt over the course of nearly 2 decades now. No. It's because in addition to underwriters analyzing your credit profile when determining whether or not you're going to be approved for a loan or denied for a loan or extended the best rate option available or something subsequently less desirable, especially today, when the Fed drives up interest rates and you don't have perfect credit, it just costs you more on top of the already higher interest rates. So this is why I still make payments on a credit card that I received at a very young age, because in addition to my score, when analyzing my credit profile, they're going to look and say, oh, wow, you've had a credit card for almost 20 years. The length of time of the oldest account is very important for the underwriting purpose. Now, I don't have a balance on this card that I've carried since I was, not even legal age of consuming alcohol. I just continuously use the card to continuously keep it active, to continuously have, an open line with this lender so that my longest standing credit account stays on my report, stays on my profile. Which is why I don't need the card. I don't need the credit card. But I also haven't closed the account, because closing the account then it literally cuts off my nose to spite my face, just to say I don't have a credit card because I'm afraid of what a credit card could mean, even though I'm not afraid of credit cards. I can exhibit self-control and be responsible with my credit cards, but I don't want to cancel that card because it just eliminates the longest account I've had in my credit profile. So I swipe it every now and then and make sure I use it for some reason, and then I pay it. I don't accrue interest on it. I don't pay any extra fees for it. I don't have an annual fee for this card. And this card, just by keeping it active and having the presence of mind to continuously use it so it doesn't go dormant, just further helps my credit profile. So I can go out and finance whatever I wanted to at the best rates possible. I can go out and get extended greater amounts of credit. I can literally almost, the opportunities and possibilities are endless because I'm using these tools to maintain my credit profile, improve my credit score, be viewed in the best light possible by underwriters at any given point in time, to take advantage of any given opportunity made available to me that I want to jump on. So, granted, this may not necessarily be the case for many, and could quite possibly be the complete opposite of others who do have credit cards from teenage years, possibly even, maybe even younger, because their parents put cards in their name using their social security numbers, and these debts and these collections and these charge-offs have followed them for years and years and years, and ultimately has created so many derogatory marks on their credit and drug down their credit score so bad that they may not ever really dig out of the hole if they don't know how. I've helped people take their credit scores from mid-fives to over 800. But the key is knowing that you can, knowing how to do it, wanting to do it, and then executing and taking the steps necessary to do it. Granted, Dave Ramsey will say, you don't need credit, and credit's bad. But I can guarantee that Dave Ramsey doesn't run his organization and operate with zero debt. I can promise you that. And for those who are afraid of it, then by all means, avoid it for sure. But those who understand it, or at least care to understand it, and want to know more and learn more and how to better leverage this tool to increase the opportunities and possibilities that exist out there, then by all means, please educate yourself, inform yourself, use the tips and the tricks and the strategies that the wealthy have used for decades, generations, to build up their net worth to unimaginable levels by using someone else's money to make that happen, by using their social security, their credit card, their credit score, their bank, their financial lending institution, whatever it may be, to make that possible. Build businesses, use the credit available, a line of credit, a credit limit, a credit card, a bank loan, a personal loan, a collateral loan, a hard money loan, which doesn't necessarily really need a credit score to pull off a hard money loan, to get in on an investment opportunity, make your profit, pay off that debt, and continuously build and grow moving forward down the road.